Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. After having found key support at our 2x1 angle numerous times, we can see the way in which the market did respond this most recent time, and we now have a potential time factor coming in where we have our upside 1x1 red angle situating itself as potential resistance. Overhead, we have our point of control level at 403 3/4, and we suppose that this could very well be a potential time and price coming together, where we have the point of control, our time factor at the end of our gray zone, as well as a very good move up from our last 2x1 angle, setting itself as a position where corn could very well find a nice or reasonable reversal. If it's able to get through this point of control number, we think continued strength is possible, but this is going to be a very key area for corn, especially as we approach the end of the week. We're considering that this top could be very significant given our time cycles. Another key caveat as to why this potential top could be significant is we're sitting right up against our volatility-based resistance band, and we're up against one of our degree marks. The market had previously tested our 180-degree mark numerous times. And on this final approach, the market is finally able to break through, and we saw a very nice move to the upside. Typically speaking, after a market tests a level 3 times, the 4th time is typically the charm that we have found by our metrics. And as the market did come through this area, we saw a very nice move through this number. We can see now where our volatility bands are coming in, giving us potential resistance overhead. And so somewhere between 400 to 405 could very well prove to be significant for this contract. The December contract gives us a very similar formation where we found support up against our 1x1 angle. And the market here we can see has held very good support generally speaking. We had a minor breakdown below this 1x1 angle, but support did come in at a couple of our key support levels below. We had our point of control at 405, and then somewhere near 395 is where we found our next really key support where the market really did bounce from. From here, we can see a very nice move where we found key resistance at our time factor. The market came in for a retest and is now breaking through. And so our next point of control number for the December contract sits at 425 1/4. This is where we anticipate potential resistance as the week rolls to a close, and the way in which it responds to this level again will give us a good feel as to whether continued strength is possible for this contract moving forward in the near term. Previously, we shared how the 180-degree mark of 419 1/4 was going to be, or was looking to be, important for this contract. We're now breaking through this number, and the market looks to make its advance on the way up. We're currently sitting on a near-term time factor for the corn complex coming in over the next couple of days, and once again, we'd like to see the way in which it responds. We do have overhead resistance again sitting near 430, and then the next important time factor that we would keep on our radar is going to be May 25th. And so if the market's able to break through resistance overhead, we could very well see the market trickle up into the 25th. Otherwise, we would anticipate that at the close of this week or early next week that we find a major top, perhaps somewhere near that 425 to 430 mark. And from there, look for a precipitous decline going into May 25th. And then we would check to see the way in which it responds near this timeline to see if continued weakness is on the horizon or if the market's able to find some form of support near that time factor. July beans managed to hold itself up against our Fibonacci 78.6 number, where the market did find a very nice drop coming into this level. And since then, we saw a bit of a bounce to the upside. We got resistance overhead at our key 1.272 factor. The market dropped back down to that 0.786 number. And again, today we see a bit of a rally. The key number that we're going to be looking for this July contract sits at this 1065 number. If it's able to close above this 1065 this week, we think that our targets overhead to touch 1100 are still on the table for us as far as soybean is concerned. Some of the concern that we are seeing is that the records show that China has not been purchasing as much soybean as of late. So that can play a potential role in the movement that we're seeing here with soybean. So right now, the two levels that we're going to keep on our watch are going to be that 1036 and 1065. The side upon which it breaks and closes with some follow through would give us an indication as continued strength for that direction. But until then, we're simply going to sit on our hands and wait for him to give us a clear, definitive direction as to where he potentially wants to go. One standard deviation above the point of control sits at 1043.5. And this is the area where we see the market has found a bit of support after it broke below up against our 2x1 angle. We now sit at a potential time factor and we see a nice move to the upside on that time factor. And so tomorrow, if the market gives us a nice buyer's bar or closes above today's high, then we would expect that potential upside strength could very well follow through after the weekend. But again, once again, we want to see the way in which the market responds in the near term. November beans is in a stronger position whereby it's made a higher high most recently, and the current movement that we're seeing is on the heels of very strong momentum. November beans is also trading back up against prior resistance at the 1052 number, and as you can recall previously, that 127.2 factor was a very important level for this contract in determining for us the probability of continued higher prices. We're back against this level that we had previously discussed, and if we're able to once again close above this number at the close of this week and find continued strength moving forward, we think that an upward movement that goes up to test maybe 1070 could very well still be in the cards. The caveat, though, that we're looking at is the fact that the market had very strong momentum on the initial drive up back in March, and the most recent advance to the upside has been on significantly less momentum. This is a classic case of divergence as we look at the market here, and we can see that even in the current drive that's happening right now, that the market does not have very much momentum in it. That being the case, even if we were to break to new highs, the capacity for the market to sustain those levels is quite suspect, and so we remain reserved in terms of the market's ability to continue higher. From this vantage point, we can see that we are in the throes of volatility-based resistance, alongside of being very close to our 360-degree mark at 1050. That being the case, then, if the market were to break up to new highs, we would be looking at great resistance somewhere in the neighborhood of 1080 or so. It is very exciting for us to see the way in which the wheat contract has been moving. If you recall, we suggested that as long as the market was able to hold 465 and give us a close above this 488.5 number, that the probability of continued strength and a retest of 525 was probable. You can see in the movement here that the market has been moving very strong to the upside, and the current potential drought conditions in the growing regions continue to be of concern, which lends the market the capacity to even reach upwards of 560 or 570. We are now hitting up against one of our time factors for the wheat contract, and we do believe that continued upside strength is probable, and most importantly, where support came in last time was at 480. 480 was one of our 180-degree time factors. The market has made a full 90-degree increment up to 524 3/4, found good support inside of here. If the market continues to be able to move upward and does not fall back below this 525 number, we believe then that an upside target of 570 is very probable for this contract before the move to the upside terminates or this contract comes off the board. In closing, we'll take a look at the US dollar index. And as we can see in the recent movement, we were able to break above that $91 mark prior to breaking below 89. And in doing so, we saw very good continued strength through that number as the US dollar has been trading. Of key note, we brought to your attention previously that the market had made 3 subsequent higher lows. And in doing so, the market had formed a nice triangle pattern with a nice breakout to the upside. Now, the current key level that we're going to be looking at is 92.64. If this market's able to close above this 92.64 number this week and close 2 to 3 times above that number, then the probability of the market making an upside reach to about 94 to 95 is very probable. And so the key level of concern that we'll be looking for the US dollars sits at 92.64. The weekly chart shows us how strong the US dollar really has been these last 2 weeks. In the movement that we're seeing, we can see the volatility band starting to dip down a bit, but prior resistance that we had looked at previously is now very close to where these market highs live. And so the next area that we'd be looking for potential target sits at 95 in the event that the market once again is able to break above that 1.272 number that we discussed. Thank you so much for joining us for our market update. Look forward to touching base with you again next time.